Hello my fellow freedom builders and welcome back to the channel. Today's video is about Intel, the big chip maker that came out with their earnings yesterday. And I must say that the reason why we make a video like the one on Intel today is that we have gotten a lot of feedback on the Tesla video from yesterday, because what we try to do in these videos is not necessarily to see where's the price going, should it go up, should it go down. We are trying to put the numbers into our MyStockScanner software and see where the stock could go, and if there is a larger upside than a downside or the other way around. And for instance with Tesla, well, we have been saying for a while that there was a much larger downside, so that it wouldn't take much to disappoint and therefore the stock to drop. And that is exactly what has happened. And that is what MyStockScanner software can do. It is not a prediction software. It is a math software, a modeling software where you can put numbers in. And of course, the charts are no better than the numbers we put in. So today we're going to have a look at Intel. And first of all, it says here Intel stock sinks as early 2024 outlook comes up short. Now, if we're looking at the earnings calendar from yesterday, we can see here that Intel actually came out with a result quite a lot better actually than the forecast. There was expected 45 cents in earnings per share and the actual was 54. Also, the forecast on the revenue was 15.16 billion, and that also was a beat here. And then many new investors are asking themselves, now why is the stock dropping then? If we are looking at Intel today here, we can see they have been on a fantastic uptrend. If we're looking at the weekly trend, well, then there is still an uptrend. We can draw a line here, we can draw a line here, or wherever we want to draw the lines. That is, of course, the weakness with lines and channels and technical analysis, and that is you can basically draw the lines any way you want to, according to your bias. But it is dropping a lot today. In the time I am recording this, it is down more than 11% today. Now, how come? How can that be when they are actually beating the forecast? The answer here is guidance. Every time that we get these quarterly earnings, there is also a guidance, meaning that the top CEO and CFO and so on are on an earnings call, and they are asked different questions, and they are talking about what do we expect for the future. And often when we see a drop like this today, it is because that the guidance is weak, as it is called. So let's try and have a look at it. I tried to look up Intel in Seeking Alpha, because there are a lot of analysts in there. And we, for instance, have one here saying it's definitely a sell right now. It is irrational AI hype rally. Okay, and we can read this and say and see that, well, Intel is, according to this analyst, absolutely not a very strong stock, and it is way too expensive. And we can read all the analysis of that here. Then we move on to the next one. He has a strong buy. That is the Asian investor, and he says time to load up the truck, meaning you better load up some stocks now when it is cheap. And he comes out with all the explanations here. And well, if you don't know much about the chip business and you are not familiar with Intel or AMD or Nvidia really deep in depth as a core of the business, then both of the articles here can actually sound deceivingly well logical produced, because, well, they have all the numbers. It is all looking good. We can look at another one saying Q4 earnings quick takes, time's ticking. This is a hold. So, but again, this one has been holding all the way through here. If we're looking at for instance, the Asian investor, he said sell, 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 hold, and then a buy down here. That was quite well timed, you could say. And this one has been a sell since, well, basically since forever. Sell, 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 and the stock has just gone up. So the question is, who can you believe? You can go in and look at some of the other articles these different analysts have, and you can look at what are their success rate. There's also one here, Quad 7 Capital. They have a hold, and they have had a sell down here, and well, having a hold all the way up. So what should we do? Well, we can try to do something ourselves. We can look into the earnings report ourselves. Let's see, we have the earnings report here. That is a hefty 137 pages of information. What I am trying to look at here is, especially with these larger companies, to try to get some sort of ideas where are they going in the future. I am looking at the different regions they are selling stuff in. And as you know, Intel, yeah, they are producing chips. And right now they have quite a lot, almost a, what is that, 25-30% of their total revenue from China. And if you've been following the news, China is not too fond of US not too fond of China. Biden have started this quite massive chips act where they are trying to get more chips produced in US so they are not so dependable on other countries. So this one, as we can see, over 21, 22 and 23, the revenue has been dropping quite a lot, actually by a third in China. We can see the revenue dropping in Singapore. We can see it going up and then a bit down in United States, and I believe actually it will go a bit more up in United States because the US and the Biden administration and all the politicians are interested in taking back home more to US companies of chip producing. We can see the Taiwan revenue is basically cut in half, and then there are some other regions. So it is not going in the wrong it's not going in the right direction for Intel right now. Then you could argue that they have some legs in their business. You can see they have client computing, they have data center and AI, network and edge, mobile eye, and so on. And you can see all the different aspects of the business and what revenue and what earnings they're making on them. And of course we can be a bit more clever when reading about that. What I do like to see is also looking at what do the analysts think. And I know this is probably not updated with the latest numbers, but even if it's the numbers from before earnings yesterday, we can see that the earnings per share consensus among the analysts, and we can see here there are 15 estimates here and 8 here for 24 and 25, and we can see that the earnings per share consensus is $1.22 as an average among the analysts, with a high of 1.89 and a low at 0.25. We can also see that out in 25 there is a consensus of 1.54, that is the average, with a high at 2.41 at a low here. I'm not sure about these low numbers, they seem a bit too low. Anyway, these are some of the numbers that we can try to put into our models. So here we have Intel, and as you know, normally when I invest, I start looking out here and looking at, are they actually making money? And it is a bit of a problem here because there have been some, especially when we look at the continuing operations here, there have actually been negative earnings per share down here, which means that they don't really have return on capital and return on equity as of the last numbers here. However, we can try and put some of the numbers into the formula here in the valuation chart. We can also see that the forecasted PE is around 18, and if we are looking at the historical price earnings down here, we can see that they have been around the 8 to 14 on average over the last 3 to 20 years. So let's start to try and put a bit of numbers in here to see if Intel would actually be a good investment case for us right now. As you know, we like to put the estimates from the analysts in here and then try to to take a bit away from it to see, okay, what if things go worse than analysts are estimating? So if we are starting by removing the analyst estimates here, and we are looking at 3 earnings reports into the future, and let's say that right now, since the earnings are negative, we will actually have a box down here saying earnings all negative. So therefore, we can't take any growth numbers from that, any percentages. So let's try and take the number here and say, okay, the earnings estimate for 2024 is actually $1.22. Let's try and put that in here. 1.22. And refresh, meaning that now they are setting this as of December 2024 to $1.22 in earnings per share. All right. We have a price earning here at 18. That is maybe a bit to the high side when we are looking at this. So let's try and let's just see here. Right now, the reason why. Let me just take this again. The reason why this green line is going almost vertically up is that it is taking a very high number here on the earnings. We are just setting the earnings to 1.22, and if we are looking at the growth in the on the average here from 1.22 to 1.54, that is approximately 25. Let's say 30%. So let's try and put that in instead of this crazy high number. So let's try and put 30% in here. That is a 30% growth over the next 2 earnings after the 1.22 here. So if they can grow their earnings per share by 30% outside the next year here, and we are having a price earning at 18, which is in the high end, then we can actually see that Intel should drop in price. It should go down to something like 36 instead of this 57 instead of this around 50 that we are at now, of course dropping to 44, 45, something like that today. So that is with a price earning at 18. Now we can look to some of the other chip manufacturers, for instance AMD. Now AMD, if we are looking at that, they have a price earning. Now this is a bit exaggerated as well, but if we are looking at many of the years, they are somewhere around the 40, 50, sometimes up around the 80 numbers. Estimates are it could drop to 33. But they have a history of very high price earning ratios, whereas Intel have been between 8 and 12. And now you could ask yourself, Intel has been lagging behind on a lot of the technical stuff. They have lost a massive share of the market to a lot of the other chip makers. So the question is, do you believe that investors in the future will start paying the same massive amounts in price earning as they are for instance AMD? You could look at Nvidia or Taiwan Semiconductors or some of the others, and they probably aren't. But even if we are bumping this up and saying, what if they would actually pay a price earning at 35, which is way above what they have been here historically, well then over the next 3 years the stock could go up 45%, which is decent. Absolutely, it could go up to the 70 something here, and that percentage is of course higher because it is dropping 11% today, but 30 in price earning is probably not that realistic. So let's bump it down to 18 again. Sorry, that was this one, 18. And then let's have a look at how much they should grow their earnings per year before we actually get into the positives. And this is assuming that they're making 1.22 in earnings per share this year. And we can see that the next couple of years, just to be a break even from this price here, they should bump up their earnings per share by 51% per year these 2 years here. Is this possible? Well, yes it is, maybe, because they are really growing on some certain segments. For instance, this with the CHIPS Act, where Biden has said we want to take home the chip production to the United States. So they have something going for them there, and you can dive into the different aspects of the business and saying, yes, I believe that there's a lot more growth here. And also remember that if all of a sudden they bump up their growth to, let's say, 75% per year in earnings per share, then investors often start to get a bit more willing to take a risk, and maybe even saying, okay, well, then we'll pay a price earning at 25 maybe. And all of a sudden we have an entirely other business case. So what I recommend that you do is that you take some of the analyst numbers. You can also go in and say, okay, we actually believe that this high earnings per share forecast, that should be the one that we use instead. All right, then we just go down here. We put in 1.89 here, press refresh, and then this one is 1.89, as you can see. And if it can then grow by 50% per year, and there is a price earning of 20, well, then we have a decent business case. But again, you can always compare and go into AMD and go into their valuations, look at their numbers and saying, okay, they are actually making money right now. They have a price earning that is way higher. So let's play a bit around with the numbers here and say, okay, they can grow something the next couple of years here. They might be able to grow 40% extra the year after. Let's just see like this. And they have a higher price earning, and then you can start to compare them. Again, this system is not better than the numbers you put into them. And if you are extremely good at finding out what the earnings will be this year, what the growth will be, and what price earning investors are willing to pay, well, then you have a good case. If you put the completely wrong numbers in, if you think they can grow by 200% here and investors are willing to pay 100 in PE, well, then you can get some insane numbers, but they probably won't be right. Personally, I do like to take the conservative route and say, okay, we have the 1.22. If we think that is correct with the guidance that came yesterday, this might actually be lower, but let's try and put it in. We try and put the numbers in from the analyst. Let's bump this down to 1, just to say, okay, with the guidance yesterday that were quite negative, it might only be $1 in earnings per share here in 2024. And let's say they can grow by 20% per year from there. And let's say that the investors are actually willing to pay 18 or maybe even only 15 in price earning for Intel. Well, then you will actually have a look at a more than 50% drop in price. So personally, I would not from this calculation choose to invest in Intel, simply because that when I look at the analyst estimates and I am deducting some from it and saying, okay, they're probably wrong. I do like to be conservative, so I'm looking at the worst case scenario. And if I can look at the worst case scenario and still have a reasonable break-even trade over 2 to 3 years, well, then I don't mind trying to take a position in a company. But if I take the analyst estimates and I take a worst case scenario and it looks terrible like this, then I am not so inclined to take a position. Again, I'm not saying where Intel stock should go. I'm just saying that in my humble opinion, there is a lot larger downside in Intel than there is an upside. And I do like to take positions in stocks where the upside is the one that is most likely, where there is a huge upside, and if things should go wrong, then the downside is actually not that bad. So in that context, it seems like Intel is priced at too high a level. Doesn't mean it can't go up. It can maybe in a year or half a year, it can be up 100%, and you can get back to me and say, oh, Hans, you were all wrong. But no, I'm actually not. I'm just saying that taking a look at the different perspectives, there is a larger downside than an upside in my opinion, and therefore I personally would choose another stock. Doesn't mean you should choose it. You should do your own analysis, your own risk management, your own due diligence, and so on and so forth. You know the drill. That's all for now. Take care of yourself and your money out there, and I'll get back to you again shortly. Bye.